This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say, at PennyMac, greatness lives here.
Welcome to The Interest, your daily breakdown of the news that matters. I'm Mike Savino, and these are your headlines for today, May 11th. Our top story, Rocket saw a net income of $1 billion in the first quarter. The company is now sitting on a pile of cash that could make it a player in the acquisition market. Rocket's earnings were actually down for the first quarter. The $1 billion in profit was a 41% drop from last year. But Rocket also now has $2 billion in cash, prompting questions during Tuesday's earnings call about possible acquisitions. CEO Jay Farner said that as we see people pull back, as we see capacity get reduced, as we see people struggle, there will be opportunities, and if they're the right ones, we're positioned from an asset perspective to take advantage of those opportunities that will position us to grow. Now, we may be headed for a down market with rising interest rates and dwindling inventory, but Rocket's not the only company that raked in the dough over the last 2 years. So what does this mean for 2022? Our own Christine Stewart asked some industry experts.
You have a lot of companies out there who are weaponizing their 2020 and 2021 earnings.
There's a lot of places they could put that money.
Whether they put that money to work in signing bonuses or new technology or buying other companies, it's up to them.
The industry is coming off a boom, but there may be smaller companies with older management who are interested in getting out of the market.
That companies who are looking at divesting themselves of channels that they may have added during the last few years who that are not profitable. It is a very interesting environment.
Chrisman says the announcement by Rocket CEO Jay Farner that they are in the market for an acquisition really isn't a surprise.
It more reinforces what those in the industry are already seeing and doing.
He says if there's a cultural fit between companies that maybe have similar earnings but want to combine marketing and accounting departments or serve two different geographic areas, then they may look to merge.
Rather than build something from scratch, take an existing operation, tack it onto your own, do away with or combine their ops departments.
Rocket declined to comment on what companies it's looking at, but Kevin Barker, an analyst with Piper Sandler and Company, says it's likely to be something in the mortgage origination area.
I think they like to stick with their bread and butter of, conforming loans. I mean, it could be jumbo, it could be others, but I think they're going to focus mostly on conforming originations.
However, Barker, who asked Farner Tuesday about a possible acquisition, says Rocket hasn't been able to capture as much purchase volume as quickly as they want to.
That typically lends itself to a distributed retail franchise with a branch-based network, a more distributed local sales force.
I'm Christine Stewart for the Mortgage News Network.
On the other end of the earnings spectrum, Finance of America lost $64 million in the first quarter. That comes after FOA lost more than $1 billion in the fourth quarter of last year. The company pointed to rising interest rates and a widening credit spread as the reasons. Executives also said they've cut almost 600 jobs since March. And finally, interest rates keep going up, but that doesn't appear to be a problem for mortgage originations. Applications went up by 2%, making this the second straight week that we saw an increase. The climb was driven by a 5% jump in purchase loans over the last week, but that number is still down from last year. Meanwhile, refis fell again and are now down 72% year to year. The rise in purchase loans comes despite the rate on a 30-year fixed mortgage eclipsing 5.5%, according to the MBA. Adjustable rate mortgages do continue to become more popular as people look for lower rates.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, go to mortgagenewsnetwork.com.